Breaking news for XRP investors, a brand new XRP spot ETF goes live tomorrow. And during today's episode, we're going to show you all how $5 billion asset manager 21 Shares has their ETF product ready to go live tomorrow. We're also going to highlight how over 1% of the circulating supply has been absorbed by ETF issuers in just the first 8 days after approval. With this massive supply shock we've been anticipating happening as we speak, we're going to break down the analytics and data that lead us to believe massive momentum is coming to the XRP price chart. We also witnessed over 40,000 new wallets be constructed over the weekend. We're going to highlight what actually could be happening here. As institutions are rallying around the XRP ledger, we're going to break down exactly what's happening and how this could impact XRP investors. Hello and welcome back to another episode of Good Evening Crypto, your favorite crypto news related channel. If you enjoy this content, smash that like button and subscribe, as you're going to get an update every single day, 5:30 p.m. Eastern time. And today's breaking news, we have a 5th spot XRP ETF ready to launch on the CBOE tomorrow. Now, this is phenomenal because once again, we've been anticipating over a dozen products being launched in the calendar year of 2025. This is product number 5. Now, 21 Shares has over $7 billion in assets under management, and they're going to be launching this product on the CBOE. We still have to witness Wisdom Tree in $100 billion in assets under management. CoinShares has $5 billion, ProShares has $70 billion, and there are a couple of others just over $1 billion. So what does this mean? There is an increasing demand for the XRP token, and many of the issuers are beginning to absorb the circulating supply. And this is a massive impact that XRP ETF issuers are already having on the circulating supply of our favorite digital asset. XRP supply on exchanges has dropped over 45% in just the past 60 days. From having over 3.95 billion units of XRP on September 21st, global exchanges are now down to just 2.6 billion units of XRP as of November 27th. The exchange balances have fallen by more than 45%, and this is in perfect correlation with the ETF buyers that we've been witnessing since they launched last week. Binance reserves collapsed $640 million. This is the exact amount that ETF issuers have seen in inflows since these products went live inside the United States. And many Bitcoin enthusiasts seem to be concerned about this development, as Wolf of All Street's Scott Melker commented, Binance's XRP reserves fall to a low of 2.7 billion tokens after 300 million withdrawn since October 6th. Now, a Bitcoin maxi said, the Ponzi is running out of legs, but our friend Mikkel corrected this, saying people loading up on XRP and putting it in cold storage is the Ponzi running out of legs. Instead, this is the Ponzi getting kicked into overdrive. And if I was to follow this analogy, what we're witnessing here is long-term investors accumulating the XRP token, going directly to exchanges and OTC desks, and handing it over to the ETF issuers. Given a long enough period of time, as supply continues to reduce on exchanges, we're going to see a moment where a supply shock hits the open market. There's going to be buys of 100 million, 200, even 500 million units of XRP, and the OTC desks simply aren't going to have the tokens to correlate with that cash value. What does that lead us to believe? At a particular moment in time, when the exchanges and OTC desks are running low on XRP, yet these ETF inflows continue here inside the United States, we will see a dramatic increase in the XRP price chart, very similar to what we witnessed back in the fall of 2014. With the XRP price chart going from about 50 cents to nearly $3 in value, with this new ETF demand, we can anticipate similar momentum heading into 2026. If you believe XRP breaks its all-time high in 2026, smash that like button. If you think we stay below 384, leave a comment underneath the video. But we're going to take you guys through the data showing how at a particular point, due to this new demand, there is a massive movement coming in the XRP price chart according to our analysis. But it's not just the ETF issuers that are adding new demand to the XRP token. Someone is doing a lot of account set TXs on the XRP ledger recently, even after BitGo had stopped. Now, what does this mean? For those who aren't familiar with account set TX, it basically means that someone is configuring a ton of wallets behind the scenes. Stuff like setting multi-sigs, updating keys, turning certain flags on or off, or adding domain information. Regular people don't use this in bulk. So when you see numbers like this, it's almost always a custodian, an exchange, or some type of institutional setup. BitGo did the exact same thing a while back, but this new spike looks like it's something completely different, getting a large batch of accounts ready to roll. So what do we think is happening here? We believe that institutional investors are setting up these wallets in order to turn them on once the Clarity Act is passed in 2026. When the Clarity Act enables real-world use cases inside the United States, it is the XRP ledger, as the only digital asset with legal clarity, Bitcoin does not have legal clarity and XRP does, that institutions are going to be most comfortable leveraging post Clarity Act passing in 2026. This will also lead to a massive consolidation of capital into projects that are facilitating real world use cases versus projects that have built their entire business model based on speculation alone. And although the XRP community is still investigating and determining what's happened here, one thing is clear: all signs point to a major institution getting ready behind the scenes. And what I find so interesting about this data is with the ETF issuers stepping into the market and these custodians building new wallets behind the scenes ready to turn on real world use cases, this is a very similar setup to what we saw back in 2017. Liquidity on exchanges for XRP began to run extremely low post the major liquidity event that you can see on the price chart here. Now, why is that exciting? Because following this event, we watched the price of XRP go from a fraction of a penny to nearly $4 in value in only 240 days. That is 70,000% gains in less than a calendar year, meaning every dollar that somebody invested into XRP at this time was worth over $7,000 before the end of 2017. Now, we're seeing a very similar correlation here in 2025 with these ETFs being passed, with that major liquidity event taking place in early October. Now, what's really exciting about this is if the price chart is preparing to do a similar move, we could be looking at a double-digit XRP before the end of the year. If you believe XRP reaches double digits, let us know underneath the video. What is your speculation as to what we're witnessing, as we're getting many of the same signs right before XRP took off back in 2017. Now, we also have the Bitcoin and XRP pairing creating a bullish structure as well, as we could very easily see XRP decouple from Bitcoin during the calendar year of 2025. With these ETFs creating new institutional demand, this could be what we need to bring in the next wave of liquidity and separate us from the rest of the crypto market. Now, observing the XRP versus Bitcoin pairing here, it is very clear to see that if we're able to break out of this range we've been in since early 2025, we could be heading to ranges that we have never seen before. And that would correlate perfectly to the price chart, reaching those levels above $3.60, potentially getting $4 daily closures before it's all said and done. We're also watching the retail investor sentiment separate XRP from the rest of the projects in this space. When projects like Cardano and Solana never really went on to outperform here in 2025, XRP has been one of these projects that's performed extremely well against the rest of the market. Now, although we reached $3.65 during the summer and we've retraced all the way to 220 here, we've held up very well against the rest of the market. We saw projects like Cosmos go down 99% during the liquidation event in October, and even a project like Cardano, which is in the top 10, experienced a 70% liquidation event during that time. Well, the odds of XRP having a positive year here rise to 69% according to traders on Kalshi. Now, why is this so important? Because regular traders are realizing that XRP has institutional demand that many of these projects simply lack. And with these new ETFs products going live here inside the United States, many of the biggest players in America have easy access to XRP. Bitwise, 21 Shares, Canary Capital, Grayscale, and of course, Franklin Templeton have already launched XRP ETFs inside the United States, and we've seen substantial institutional demand during that time. A reduction on circulating supply, a reduction of supply on exchanges of 45% during that time, as well as the fact that we still have the majority of these products not yet live inside the United States. As these companies continue to accumulate and as that circulating supply is absorbed, we are getting ready for some really exciting momentum, but just for XRP. What's really interesting about this is the brand new institutional demand that we're witnessing right now for the XRP ledger. That doesn't extend to Cardano. That doesn't extend to Solana. This is an XRP ledger focused development, and we're only going to see that accelerate as more of these products go live. And this user took the time to calculate exactly what this new demand could do for the XRP price chart. He stated, I ran a price path sensitivity simulation based on the following assumptions, and the results are wild. This doesn't even factor in the FOMO or broader adoption. So let's lock in, said this user. ETF demand baseline is 74 million XRP per day. The supply on exchanges right now is 2.7 billion, and the escrow is adding an average of 300 million units every 30 days. The price model used elasticity values of 0.2, 0.5, and 0.1 over 180 days. Low elasticity equals fast exchange depletion, while high elasticity equals violent spikes and OTC soaking up these flows. Now, why is this so interesting? Because this X post highlights that the sensitivity simulation for XRP over the next 180 days could lead us to a low price of $8 and a high price of over $700 based on the daily ETF inflows of 74 million being depleted off exchanges daily. Now, these assumptions include a conservative 2.7 billion XRP on exchanges and a 300 million in monthly escrow release, leading to a rapid supply exhaustion and a spike to higher prices. And for those wondering, why would the XRP price spike based on this new demand? Because if $10 million worth of a buy comes in for XRP and the value is $1 per unit, well, then 10 million units of XRP are going to be given to the OTC issuer. But if a $10 million buy comes in and the price of XRP is $10, then the OTC issuers only have to give up 1 million units to the ETF issuers. This would reduce the rate that XRP is diminished on exchanges. So for the first time ever, institutions and exchanges have a mutual incentive, just like the XRP community, to watch the price go up so that the supply doesn't get rapidly depleted. So with these new products going live and the daily inflows being public data going forward, I'm anticipating that things could get very exciting for the XRP community in 2025. If you're excited about an XRP ETF going live tomorrow, smash that like button, subscribe to the channel, and we'll see you all in the next one.